Hello and welcome to the Friday edition of Business Incorporated on Channels Television. I'm Ini John Mekwa. Coming up on the show today, World Bank predicts 3.9% growth for Zimbabwe in the first quarter of 2021. Government sells majority stake of South Africa Airways to private entity. And general price level in Cameroon rise 0.1% in the first quarter of 2021. Well, first, let's take the market numbers. Well, begin on a bright note, which was the state of Nigeria's all-share index at intraday. It was up 0.08%. South Africa's JSE was on the flip side. It was down 0.05%. Egypt's EGX 30 closed Thursday's trading down 0.64%. And Kenya also closed Thursday's activities in the red, 0.41%. And all markets in the Middle East are closed Friday, but the bull dominated at the close of trading on Thursday. Abu Dhabi was up 0.07%, Dubai rose 0.37%, Saudi Arabia added 0.06%, and Qatar also rose 0.30%. European markets were fractionally higher on Friday as global markets shrunk off a sharp rise in U.S. inflation, with many strategists believing it to be transitory. Chelsea is in Frankfurt and gives us more details on this. Hello, Chelsea. Good afternoon.
Good afternoon.
Yeah, so European stocks followed U.S. indexes to record highs on Friday. Why are investors not concerned about the surging inflation?
Yes, so markets, as you said, very much shrugging off the really blockbuster rise we saw yesterday in U.S. inflation, up 5%, and seeing some of the biggest increases in over a decade. Investors really are not too concerned about that right now. We see the DAX here in Frankfurt up about 0.5%. The broader European benchmark, the Euro Stoxx 500, is at a new record today as well. Investors are falling in line with what central bankers have been saying and what we heard yesterday from ECB President Christine Lagarde. They think that the increase we're seeing in inflation is going to be temporary. It's being driven by things like supply chain disruptions that are driving up the cost of vehicles, as well as some of these pressures we've seen from how quickly economies have reopened. We've seen price spikes for things like airline tickets. Many economists think that as we get further along in the reopening of the economy, these pricing pressures will fade. And so central bankers for now are sticking to their plans to really maintain very easy money policies to keep that stimulus flowing into the market. And that's a big relief for investors who are worried that financial conditions were about to get a lot tighter.
So German parliament is set to vote on a new law that would hold companies responsible for human rights abuses at their suppliers. What would this mean for businesses?
So the German parliament did approve this law a little bit earlier today. And basically what it will require is for companies in Germany to take responsibility for every element of their supply chain. So they have to look first and foremost at their direct suppliers, so the companies that they have direct relationships with, and monitor and come up with systems and checks where they make sure those companies are abiding by human rights laws, that they're paying people fairly, that they're not causing damage to the environment. However, they will not have to monitor conditions directly at their indirect suppliers. So, for example, if you're an automaker here in Germany and you get metals from a mine in Africa, you're not responsible for the conditions in Africa at that mine. This has been a controversial aspect of the law, but business organizations have feared that this will introduce just an enormous bureaucratic task for a lot of companies, because if you think of a big company like Daimler or Volkswagen, they can have tens of thousands of suppliers and hundreds of thousands of indirect suppliers. So they had to sort of pare back the number of suppliers that these companies are going to have to be monitoring. But it's still a very contentious law. But everyone is obviously in agreement that it's a good step towards protecting human rights all around the world.
Human rights, very important there. Well, the German central bank raised its forecast for Europe's largest economy as businesses reopen. What is the bank expecting?
So the German central bank now expects the German economy to grow by about 3.7%. They had previously been looking for growth of 3%. They've also raised their forecast for next year as well. And they've said that actually the German economy could fully recover from the pandemic hit by as early as this summer. That is a bit of a surprise. Economists had been expecting the economy to not fully recover potentially until the middle of next year. So things are really starting to brighten here in Europe, in part because of the strides European countries have made in the past several weeks towards increasing vaccination rates, towards reopening businesses. That's really starting to filter through to the economy. But at the same time, many economists warn that the coronavirus is clearly not over yet. There are still risks on the horizon from that, as well as the increase we're seeing in inflation could also at some point dampen economic growth.
All right. Thank you so much, Chelsea, and enjoy your weekend. Well, we move over now to London, where Simon is waiting, joining us now to give us updates from the UK. Hello, Simon. Good afternoon.
Good afternoon. How are you doing?
Well, it seems markets around the world are reacting to the U.S. inflation. What's the reaction in the U.K.?
Yeah, well, London's blue chips are continuing to push higher today, with the FTSE 100 notching up new 52-week highs. Lots of people pointing to that growth of 2.3% in April as the easing of COVID-19 lockdown measures fueled a rebound in consumer spending. Let's take a look then at the markets. And on that news, the FTSE All-Share at intraday was up over 0.5%. The FTSE 100 up by almost exactly the same amount, and the FTSE 250 up by 0.44%. Turning to the pound, and increasing political tensions, of course, between the UK and the EU are said to be, by a number of foreign exchange analysts, to be weighing on the British pound. As you can see, compared to other indices, it is mainly in the red. Sterling down on the US dollar by 0.17%, down on the euro very slightly, and only up very slightly on the yen. However, analysts say the pound could recover strongly should any US-led diplomacy over the Europe issue in Cornwall bring about an ultimate compromise. So all eyes on how talks at the G7 pan out over the weekend.
We see that the UK economy is picking up, but it's not all good. You know, there are some aspects that are not really picking up along with the GDP. What's going on around that?
Yeah, from the end of June this year, people who haven't got pre-settled status can't work. This means hundreds of thousands of people from across Europe who would previously have been employed on UK farms now can't work. Lots of farm owners have been worrying about what will therefore happen in the summer when lots of fruits are ripe for picking. In response, the government say they've expanded the seasonal agricultural workers visa scheme, which allows people to come to the UK for up to 6 months to do farm work. From 10,000 visas last year, that's up to 30,000 for 2021. It obviously remains to be seen if things like COVID restrictions and a much reduced level of government movement and travel mean people do actually take up those summer visas this summer. So yeah, it's a sort of bit of give and take in terms of what the markets are going to look like and how the economy is going to work with these new restrictions coming in due to Brexit.
Yeah, and shareholders at Morrison are not so happy. There seems to be a protest there. What's going on? What's the company doing about it?
Yeah, well, profits at Morrison's, so this is a big supermarket in the UK, they halved last year after it handed back £230 million in business rates relief and endured £290 million in direct COVID-19 costs. It said pre-tax profits had dived by over 50% to £201 million. Morrison's executives say that the pandemic was not the boss's fault, and therefore their bosses should get 100% bonuses, even though profits halved in the year. That's caused a lot of controversy, of course. It's argued that while undoubtedly the big supermarket chains, including Morrison's, did do an excellent job in keeping shelves stocked in tricky conditions and people fed. A bonus is not meant to be a semi-guaranteed entitlement. This time last year, a lot of people expected supermarkets to be among the businesses that emerged from COVID-19 stronger. But as those Morrison's results show, it was not that simple. Shares in Morrison's closed trading down about 1% on that news yesterday, and it looks like the company aren't going to cut any bonuses or pay to senior staff, despite the controversy of those huge numbers. And for example, one of the bonuses was £1.7 million to their chief executive. So you can see why people might be upset about that if profits have gone down 50%, but they're still paying bonuses of over £1 million to their staff. But it looks like they're going to continue to do that. And they say, it's not the fault of their bosses that COVID-19 happened.
Okay, all right. Thank you so much, Simon, and enjoy your weekend. Well, moving over now, we go to the Asian trading day. Shares in Asia Pacific were mixed Friday, with the BSE Sensex in India touching a record high. In Friday trade, the Sensex rose 52,641.53 above its previous record high of 52,516.76 sets in February. Stocks in Japan were little change as Nikkei 225 closed marginally lower at 28,948.73. While the topics ended the trading day 0.14% lower at 1,954.02. Over in South Korea, the Kospi edged 0.77% higher on the day to 3,249.32. Mainland Chinese stocks closed lower as the Shanghai Composite fell 0.58% to 3,589.75, while the Shenzhen Component slipped 0.62% to 14,801.24. Hong Kong's Hang Seng Index advanced 0.33% as of its final trading hour, and shares in Australia finished the trading day higher as S&P ASX 200 climbed 0.13% to 7,312.30. MCSI Broadex Index of Asia Pacific shares outside Japan advanced 0.36%. And over in the United States, stocks futures were flat early Friday morning after the S&P 500 hit a new high during regular trading despite the hotter-than-expected inflation data. Futures tied to the Dow Jones Industrial Average and the S&P 500 were up. Nasdaq 100 futures also rose marginally. During the regular session, the Dow Jones Industrial Average rose 19 points to 34,418. The S&P 500 ended the day at 4,232. The Nasdaq Composite ended the day up at 13,955.25. The Labour Department reported Consumer Price Index data on Thursday, showing inflation is rising at its fastest pace since 2008 as the economy rebounds from the pandemic-related recession. Well, back here in Nigeria, urea fertilizer production has started at Dangote Fertilizer Limited. The first phase of the project, estimated at $2.5 billion, would produce 3 million metric tons of urea. One of the expectations is that this project will shore up foreign exchange for the country. Our correspondent, Chris Lems, is at the site and brings us up to date as per what's going on there. Hello, Chris. Good afternoon. Hello, Chris.
Yeah, hello. Can you hear me?
Yes. So what's going on there now? Production has started, I believe.
Production has started, and of course, even supply were at the low.
Hello, Chris.
That's about. Hello, can you hear me?
Yeah, we can hear you now.
Yes. I said we were at the loading bay where where trucks have started moving out, and we hear that about 120 trucks will be moving out on a daily basis from that.
All right, seems the network is not very friendly from the site there. So hopefully we'll get Chris back, or he would be on other bulletin on Channels Television. But we'll just take a short break now. When we come back, we have more stories for you on Business Incorporated. Do stay with us. Welcome back. You're still watching Business Incorporated on Channels Television. Well, early last year, figures show that venture capital funding for African fintech startups had risen by 51%, with funding being generated for virtual banking projects, consumer credit checks, and finance apps. South Africa led the way with $112 million in investments, followed by Nigeria, which raised $74 million. Kenya came third, $62 million, and then Egypt, $51 million. Now, what benefits accrue to the continent from this? Dr. Debisi Araba, Public Policy and Strategy Specialist and member of Malabo Monupur panel. He joins us now from Kenya to tell us some more about this. Good afternoon, Dr. Debisi.
Good afternoon, Ini. It's a pleasure to be here.
Good to have you here too. Where fintech has the highest penetration in South Africa, 94% of individuals having regular access to the internet. Are there ways to increase this penetration in other parts of the continent in the shortest possible time?
Well, it's sort of easy and complex at the same time. I think the prospects are quite encouraging. When you think of where we're coming from, the growth of internet penetration over the last 5 to 10 years. Right now, I think it's about 475 million mobile devices or Africans are connected to mobile internet or will be connected to mobile internet by 2025, so in another three to 4 years' time. Of those, we expect about 27% to be on 4G, which is a relatively fast network, and the rest, of course, on 3G. We expect about 3% to be connected to 5G by 2025. The potential contribution of mobile connectivity to Africa's GDP projected by 2024 is estimated to be about $184 billion. That's about 7% of Africa's GDP. So we're seeing the growth, and it's starting to happen. You've mentioned the countries: Kenya, South Africa, Egypt, Nigeria. Of course, you're starting to see a lot more happening in Morocco, in Ghana, Cote d'Ivoire, Senegal. So we're starting to see the investments in the hard underlying infrastructure. Like in Nigeria, for example, most recently there was a $100 million data center commissioned by the Africa Data Centers, owned by Strive Masiyiwa, to reduce the lag time. Because when you have these data centers, what they do is they facilitate faster transactions. And so if we see an increase in these infrastructure, we see more in-country penetration. So if you see more the laying of fiber optic cables that carry the data information on the information superhighway, so to speak, then you can see these as a precursor of future growth. So for example, in Nigeria, there's been the promotion of the 145 naira per meter right-of-way tariff, which is great because, for example, in states like Ekiti that have purpose to become a digital knowledge innovation hub, you're starting to see them then surround these ideas or these incentives with hardcore investments, both from the public sector and the private sector. So I think the future for African fintechs and Africa in general is very bright.
Yeah, and talking about venture capital funding rising by 51%, what has been the impact of that, and should we be celebrating at this level?
Yeah, so that's what you're seeing, Ini. So the venture capital funds are investing in private initiatives and entrepreneurship, right? So when I say these ideas are growing, and we talk of the projected $184 billion contribution to GDP, it's a signal that is sent to these venture funds. So yes, it is something to be celebrated, and I think it's not just that we're seeing venture capital funds coming into the African fintech space. We're also starting to see more African funders funding fintechs. So, for example, you have the Future Africa Fund. You've got the First Check Fund, which I find very unique in that it invests in very early stage startups, female-led startups. So you're starting to see more funding coming in, and you're seeing the result. The result is these diversified products and services. We have over 400 fintech companies operating across Africa, generating and operating different sectors and subsectors. And they are taking advantage of the base infrastructure that exists now, and not just the hard infrastructure, but also the soft infrastructure that creates the enabling environment for private entrepreneurship to thrive. So definitely worth celebrating, and we hope to see more.
And the implementation of the African Continental Free Trade Agreement is supposed to create more opportunities for the fintech industry. Is this being explored, and how can governments, from the countries, fasten this penetration to maximize these opportunities?
It's a very good question, Ini. It's early days. AFCFTA, of course, trading started 1st of January this year. We're starting to see beyond the ratification from national states or from states or member states of the AU. We're starting to see government to government, but also entrepreneur to entrepreneur. And I think that's the secret sauce. It's not governments that are trading. It's entrepreneurs that are trading. And so how entrepreneurs now maximize their unique value propositions to not just trade better with themselves. Of course, we want African countries to trade better amongst themselves, but also for Africa to negotiate better in how they trade with the rest of the world. So digitalization and fintechs, of course, will facilitate or improve financial transactions or the ease of financial transactions. As you know, there are challenges in moving funds from across borders. But once you digitalize currencies, and there's a lot of excitement now about different countries considering setting up digital currencies in parallel to their national currencies. And we're in an experimental phase, not just in Africa, but around the world. So everyone is experimenting. You've seen the Bank of England, the Federal Reserve thinking about it, the Bank of China, Central Bank of Nigeria most recently also discussing this. We are seeing a phase where new ideas will be tested. And, as we say, form follows function. So after the experimentation, and once we have workable ideas that are scalable, we will then have the regulatory frameworks that will support this to ensure that you're protecting investors and beneficiaries.
All right, Dr. Araba. I know it's an area of passion for you, but thank you so much for sharing your thoughts with us this afternoon on Business Incorporated, and enjoy the rest of your weekend. So moving on now, the World Bank has predicted that Zimbabwe economy will grow by 3.9% this year, underpinned by a good agricultural season and an inflationary slowdown. However, the global lender warned that COVID-19-induced volatilities would continue to negatively impact economic activity, holding back employment growth and improved living standards. The 3.9% growth falls short of a 7.4% rise projected by the government. And in South Africa has agreed to sell a majority stake in the country's grounded national carrier to local jet leasing company and private equity firm, ridding the government of an entity that has long been a drain on state finances. A consortium comprised of Johannesburg-based Global Airways, which owns recently launched domestic airline Lift, and private equity firm will take a 51% shareholding in South African Airways. The government will retain a minority rate. And in Cameroon, the general price level in Cameroon rose 0.1% in the first quarter of this year, according to the National Institute for Statistics. This rise was mainly spurred by an appreciation in the prices of food products and soft drinks, which was 3.4% up from 3.1% year on year. Housing, water, gas, electricity, and fuel. The inflationary pressures on imported products is accelerating, but just persistent on local products. Inflationary shocks are rather external than internal. And that's it for this week on Business Incorporated. Thank you so much for watching. I'm Ini John Mekwa.